I was wrong. 2 months ago, I said the world would experience a Lehman moment by November 1st. This wasn't a prophecy of things to come, it was just my personal belief that the central bankers wouldn't be able to paper over these massive problems beyond that point. Well, here we are on November 3rd, and such a Lehman moment hasn't come. Does that mean that a Lehman moment won't come? Or does that mean things have changed? Hey guys, Britt here. Welcome to End Times Bible Prophecy, and that's what we're going to talk about today. So this Lehman moment, this collapse in the Western financial markets based on the failure, some sort of unforeseen failure of an institution, this hasn't happened yet. But does that mean that it's not going to happen? Have those problems gone away? No, they haven't gone away. In fact, what we've seen in the last 2 months is we've seen 3 potential Lehman moments where catastrophe was averted by government or central bank intervention. We had the Bank of England that intervened in the government bond market, and we found out a day later that they were hours away from seeing 90% of the UK pension funds fail if they had not intervened. We've seen 5 interventions by the Bank of Japan to either prop up the yen or to push down Japanese government bond yields. We've also seen all sorts of rumors swirling around Credit Suisse and its ability to pay its creditors. They've been selling off assets. There's been default or swaps between the U.S. Federal Reserve and the Swiss National Bank. It's believed billions of dollars were given to Credit Suisse to help prop them up. They are one of the 30 or so systemically important banks in the world, meaning if Credit Suisse were to declare bankruptcy, it would create a contagion effect that would impact the entire global banking system. So we've seen ruminations, a move toward this type of Lehman moment, but it has not happened yet. I think it's just a matter of time because the underlying problems haven't gone away. The world's governments are filled with debt. They use these worthless fiat currencies. The whole Western financial system is based on all these derivative bets that are all over the place. Warren Buffett called these financial weapons of mass destruction, and it's only a matter of time before one of them goes off. So again, the energy problems that we're seeing all around the world, the energy shortfall, particularly in Europe, is a problem that can't be overcome by central bank or government intervention. Central banks and governments, they can create a bunch of ones and zeros on a computer or a bunch of pieces of paper, but they cannot create energy. They can't create food. They can't create the real things of the world. So on that note, I want to turn to this article from Zero Hedge. This is titled, "We're at the End of a Major Era, Von Greyerz Warns of $2.5 quadrillion disaster waiting to happen." Now, this article is based on an interview between Greg Hunter of USA Watchdog and Egon von Greyerz. Egon von Greyerz is a former Swiss banker and expert in risk. Here, if I'll put a link to this article in the description down below, that they have the full interview here. I encourage you to go watch that. But this article just gives a summary of the big major points that are made. So we're going to go over those. It says, Egon von Greyerz is a former Swiss banker and an expert in risk. He says the risk in the global markets has never been this high. He explains credit has increased dramatically through derivatives. All instruments being issued now by banks, pension funds, stock funds, it's all synthetic. There is no real underlying payments in almost anything. Now, what are derivatives? What does that mean? Well, it means every asset in the world has these derivative claims on it. So, for instance, you might own a house, and then there's a mortgage on that house. And then we heard in 2008, 2009, you probably heard of credit default swaps. That's where these institutions, these financial institutions, they would come out and they would essentially insure against you're not paying that mortgage. So in the case, you've got the mortgage holder who's expecting payment, but in case people don't pay their mortgages, this other financial institution says, we'll sell you this credit default swap. That means if they don't pay, then we will pay, right? And they sell that for a certain amount under the assumption that you will pay and that they won't have to pay back. Very much like an insurance policy. All around the world, these different companies issued these credit default swaps, and they did so and said, well, it's not a major risk if the mortgage payers don't pay because we went to this other financial institution and we bought a credit default swap from them. So if they default and we have all these losses, those losses will be offset by the credit default swaps we bought. Do you see the problem here? There's a problem with everybody thinks they're insured by everybody else. And so when the event happens, everybody's counting on the next guy to make the payment. Well, somebody has to pay out. Not everybody can be paid. Somebody has to lose on that transaction. But it's just a round robin circle of these financial institutions saying that, oh, our risk is hedged because we've bought this policy over here. But when it all blows up, you find out that that counterparty can't pay, and it creates a major problem. And then that institution has problems. And that's what we saw in 2008, 2009 with Lehman Brothers. When Lehman Brothers declared bankruptcy, they had debts that they owed to other financial institutions. And those other financial institutions thought, well, if we know that they owed money to this institution, are they going to go bankrupt next? So they stopped lending to each other. All the world credit markets froze up. The central banks were able to paper over that by just printing more currency and bailing those banks out. But they can't do that in this situation we're facing today because the problem isn't a shortfall of currency. The problem is a shortfall of energy. So that's why now this can't be fixed. We're also facing inflation problems we didn't face back then. Let's go back to this article. Egon von Greyerz, and he says, therefore, my estimate for derivatives, so this is the total number of derivatives, these contracts that are just created, and this is an unregulated market, so nobody really knows how many of these there are, but it says would be at least $2 quadrillion. So $2 quadrillion worth of derivatives, and I think that's probably conservative. Then we have debt on top of that of 300 trillion. And we also have a couple $100 trillion of unfunded liabilities. So we're talking about 2.5 quadrillion, and that's with a global GDP of 80 trillion. So these derivatives dwarf the output of the entire global economy. He goes on, he says, so there is a disaster waiting to happen, and especially because all this created money, and I would call it currency, not money, has created no value whatsoever. I always knew this would collapse, and it's taken longer than I expected, but I think we're at the end of a major era. These derivatives at some point in the coming few years will actually turn into debt. Central banks will have to cover all the outstanding liabilities of the commercial banks, as we're seeing now with Credit Suisse, Bank of England, etc. This is going to happen across the board. Whether it's called derivatives or debt, as far as I'm concerned, it's the same thing. It will have the same effect on the world financial system, which will be disastrous, of course. He says the derivative markets were simply a way for financial institutions to carry debt and not show it on their balance sheets. In the end, everything will balance out, and that's the key, is they're able to avoid regulators by taking these things off balance sheet. And then they claim there's no real risk because all of this stuff balances itself out. Well, it balances itself out the same as the just-in-time global supply chain worked fine until it didn't, right? So as soon as a major event came up where everything wasn't running smoothly and perfectly, the supply chain turned into a big mess that's going to take years and years to unravel. And the same thing goes for this derivatives market where they think everything's in balance. Well, everything's in balance until something blows up, and then it all comes crashing down like a house of cards. He says nobody can repay the debt, and they can't even pay interest. So therefore, when the debt implodes, so will the assets that were financed by this debt. So both sides of the balance sheet have to come down, whether that's down by 50%, 75, or 90%, I don't know. So think of the stock market crashing 50, 75, 90%, or the housing market. That's the type of thing we're talking about here. All I think about is risk, and the financial system will not survive in its present form. So think about that, guys. The global governments and central banks know this. They've known this for years. This is why they're talking about central bank digital currency, because they know that the current system cannot continue much longer. It's going to collapse. And when it does, something has to replace it. And they want it to be central bank digital currency. Why? Because it gives them greater control and greater power. Power over your life, power over my life, absolute control. Every transaction, every economic transaction is tracked by the government in a central bank digital currency environment, and they can control who can buy or sell, which is right out of the book of Revelation. So all of this is leading to the setup of the Mark of the Beast platform, the system that will be used to implement the Mark of the Beast. He goes on, he says, sadly, we're looking at a situation when the system will start to implode. The rich are still rich, but the poor are really poor. And again, think of that. That's right out of Revelation chapter 6, where we read of the third horseman. The third seal is opened up, and we see massive hyperinflation all over the globe, but it does not impact the rich the way it impacts regular people. So the poor, the middle class, a day's wages is equal to enough food to just survive, to barely survive. But the rich are not impacted to that degree. And so here he's talking about that's already happening to a degree, not that the tribulation is happening. So don't, I know people will take my words out of context, but this is all a precursor and a setup to these events from Revelation taking place sometime in the near future. He goes on, he says, overall in the UK, Germany, and most European countries, people don't have enough money to live. This is a human disaster already, with food costs going up 25% and energy going up the same, and gasoline, interest rates, and rents. People don't have enough money, and that is happening now. It's a human disaster of mega proportions. It's so sad, and governments will have no chance of doing anything about it. So guys, this really is inevitable. It's just a matter of timing. So again, I was wrong. I thought there's no way they can make it to November 1st and keep the system propped up. I think that failure is coming again because in Europe in particular, there is not going to be any relief this winter from the high energy prices we see, and households are being weighed down by this, businesses are being weighed down by this, and even governments that are very indebted are being weighed down by this. They can't print energy, they can't make it simply appear, even if they decided to invest in it without any reservations. It's going to take several years to bring that new energy online, and they aren't anywhere near close to doing it. So as we go into the winter, you're going to see businesses shut down. You're going to see people lose their jobs. In Europe, it's already happening. It's just going to ratchet up and to the point where something breaks. And when something breaks, it's going to cause a contagion effect that's going to ripple through the system. You know, it may be one of these things that's already broken and gotten patched over, like with the Bank of Japan, as we were talking about before. Basically, they're in a situation where if they let the interest rates on their government debt rise, it creates this death spiral where their interest payments become so large it just builds and builds, and their debt grows exponentially and they go bankrupt. But if they try to artificially suppress the interest rates on their debt by buying that debt up with yen, they have to print new yen to buy that debt, which creates more currency and then creates hyperinflation. So on the one hand, they can have bankruptcy and sort of a Great Depression type scenario, or they can have hyperinflation. But there's nowhere in between. It's one or the other. It's depression or hyperinflation. And essentially that choice before Japan is the same choice that the rest of the world has. It's the same choice that the UK faces right now. It's the same choice that the European Union faces. It's the same choice that the United States of America faces. The Western financial system is bankrupt. It's based on this financialized economy that's not creating enough real things. It's just creating debt. And eventually, what can't be paid back won't be paid back, and the system will collapse. And this energy shortage, the problems we're seeing with that, is going to force this issue and make it happen. So again, why I think this is going to happen sometime soon. Again, I've been wrong already. Thought it would happen already. But this article right here helps put this into perspective. It says more than a third of U.S. small businesses couldn't pay all their rent in October. Rent delinquency rates among U.S. small businesses increased significantly this month, the new report shows. About 37% of small businesses, which between them employ almost half of all Americans working in the private sector, were unable to pay their rent in full in October. Think about that. So it may not be evenly distributed that these small businesses, the number that they employ, maybe it's more skewed toward small businesses that employ fewer employees. But if half of the people employed in the United States fall among small businesses and 37% of them couldn't pay their rent, let's say they went out of business, that's 18.5% of all the jobs in the United States would disappear. Now again, who knows what the actual number would be, but it's a big deal is my point. And if we read down, we'll see more of that. It says about 49% of restaurants, that's almost half of all restaurants, were unable to pay their rent this month, up from 36% in September, while 37% of real estate agents couldn't pay their rent, up from 27% last month, reflecting the fallout from a slowdown in home sales as higher mortgage rates chill the housing market. Supply chain issues also remain a major obstacle for companies, particularly for small business owners who run car repair shops and auto dealerships. The scarcity of parts their customers need to fix their vehicles is still slowing business. Almost half of car repair shops and auto dealerships were not able to meet their rent this month, the report said. So think about this. Think of all the people employed by these businesses. And these numbers, these are from the United States of America. Again, think of what this is like in Europe, where energy prices are 5-10 times what they are in the United States of America. These numbers over in Europe are much higher. And so the fallout from this is going to be huge. I keep pointing back to this story, which I think really helps illustrate how bad of a crisis this is. I looked at the story about a week ago about 4 companies in Germany that have been around at least 125 years. The youngest of these 4 companies has been around since 1897. Right? And they were in a wide variety of different industries. You had one was a construction company, one manufactured sweets, the other one did soap, and the other one did auto supplies. So 4 different industries doing different things. All 4 of these companies survived and thrived through World War I, World War II, the Weimar Germany hyperinflation following World War I, the Great Depression, the rise of Adolf Hitler, the destruction of the European mainland during World War II, every event since. But within a 24-hour period, all 4 of those businesses went under. Now, you could say, well, they were old businesses that didn't adapt quickly. Well, I could understand if that was over a period of time, but all 4 went out of business in the same day after over 100 years of continuous operation. Through all of those problems. I think that, in a nutshell, tells you how severe this crisis in Europe is. I know the media mentions it. I don't think they talk about what a big deal it is, because if Europe goes into depression, the whole globe goes into depression. You can't have collectively the European Union is the largest economy in the world. It's the largest marketplace in the world. And if they go into depression, that affects the whole world. We have a global supply chain. We have a global banking system. We have a global financial system. So if that area of the world has a financial collapse, the rest of the world will as well. Now, I want to mention this because this was in comments previously. Now, when I talk about a financial collapse, I'm not talking about, every man for himself, we're living in the hills somewhere. You can have a complete financial collapse. That doesn't destroy farms, hotels, skyscrapers. It doesn't destroy real things. It just shifts the wealth. So the world will still go on, but it's going to change dramatically, and who's in power will shift dramatically. So this has huge geopolitical implications between the nations of the world and where the power rests within the world. And we'll talk about that a little bit more tomorrow. It also has huge implications for a shift in local power among politicians. So with Europe being the epicenter of this crisis, what does this mean for Europe's future? Because terrible economic conditions are fertile ground for the rise of dictators and demagogues. We've seen that in history in the past. We saw it with the rise of the French Revolution and Napoleon. We saw it with the Weimar Germany hyperinflation. The Great Depression led to Adolf Hitler. So we should expect that if these conditions are as bad as those were, that we should also see demagogues coming out of the woodwork. And could this be the environment that the Antichrist uses to rise to power? So that's for that reason alone, this is worth keeping an eye on. But this is a global situation, guys. So again, no, this sounds like bad news, but again, it is good news because all of this is just a sign pointing to Jesus coming back. Jesus is coming back. That's good news, guys. We know we live in the season of the Lord's return. So all of this just indicates he's coming back soon. He's right at the door, guys. So what do you think? Leave your comments below. Make sure to like and share this. God willing, I'll see you tomorrow. Bye. If you want to learn more about the end times and Bible prophecy, make sure to sign up for my free monthly newsletter and get your copy of my free ebook, 7 Signs of the End Times. Just follow the link in the description to get your free book. Also, make sure to check out all of my books. Just look up Britt on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.